Okay, welcome everybody to this evening's Audusd Securities webinar. My name is Duncan Cooper. Tonight's webinar is Forex Trading Live Market Analysis. And just to give you a heads up, tomorrow's webinar will be range trading using Fibonacci. If you want to join me for that, that's at 7 p.m. And Thursday's webinar will be more analysis. So just head over to the webinar page if you want to join me and register your interest for those other webinars. Now, before we get into tonight, if you can all read through the disclaimer, if you're on our YouTube live stream, I cannot see the chat, but I've given you a link to join us in the webinar if you want to join us. Other than that, for those in the webinar, you can use the chat box or the Q&A box to talk to me. And to be all yip, good evening to you. Good evening to everybody. So yeah, use the chat box or the Q&A box to talk to me if you need to. Just take a moment or two to read through the disclaimer. Hello to everybody who's saying hello to me. I hope you're all well. All right, let's move along now. If you don't know me, everyone in the webinar knows me, but for those on YouTube, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at Audusd Securities. And I'm a full-time Forex trader. Been trading in the Forex market for almost 20 years, mentoring for more than 10. My email's there if you want to contact me, duncan.cooper@acy.com. You can connect with me through the week at our website, acy.com. Go to the Market News tab or our YouTube channel at Audusd Securities Australia. And if you want to connect with me personally, my Linktree page is there. You can get my links by just heading over to there. When you get access to my chart layouts and templates for MT4, just contact Nathan.bray. His email's on the screen, but for those in the webinar, I'll put his details in the chat. If you want to get access, just contact him. All right. So first up, let's get into the news for the week. So time shown in my time, Queensland time. So getting into later this evening, 10:30 p.m. for Canada, we got the CPI data coming out, inflationary data. Now, of course, they've been cutting interest rates. So if this is all still user-friendly and the figures are coming in slightly down, that just leads more to a further cut. Dollar Canadian's been moving up, so it's in line with inflation, maybe figures coming in slightly lower. We do have at the same time US core retail sales and retail sales. So it's going to be volatile through that period, especially for Canadian crosses, and then any pair really when the US news comes out. 8:45 in the morning for New Zealand, we've got CPI, more inflation data, QQ. Tomorrow afternoon for the pound, CPI year on year. Market will definitely look into that as the pound is very high at the moment. If this data is coming in lower, then that's going to offer the opportunity of an interest rate cut coming down the track, maybe. Thursday morning, 11:30 a.m., we've got the Aussie unemployment change and unemployment rate. Afternoon Thursday, we've got the UK claimant count change. Into the evening, interest rate decision for the Eurozone. Excuse me one moment. All right, sorry about that. I had to sneeze. So tomorrow evening, we've got the Eurozone interest rate decision. Euro is very high. Not expecting a cut. We got a cut last time, so you never know. But the market's not forecasting one here at the moment, or this page isn't forecasting. Expecting it to be even, Stephen. But of course, they were looking at the monetary policy statement and the press conference at 10:45. What gets said there? Is it going to allude to more cuts? That's what the market will be looking at, I'm sure. So it's going to be very volatile for your crosses there, so be very aware of that. And then getting into Friday, 4 p.m. in the afternoon, retail sales, and then at 10:30 p.m. for Canada, core retail sales and retail sales. So there's a few items there can definitely drive currency pairs, especially this Euro news here for the interest rates and the CPI data for various countries there, Canada, UK, pound, and New Zealand, okay? All right, so be aware of tonight's Canada CPI and US data. I'm actually long dollar Canadian from last week, so I'm hoping that'll come in just lower. All right, to the charts. On the US dollar here. Now, there is a big question. This is the range. Let's go to the 4-hour chart. Pretty sure. Just want to see where I've got my fib drawn from. Sorry. All right. My last month's high and last month's low isn't working very well because I've coupled the data from the dollar index into the rolling contract to the futures because things have changed in the platform. So in any event, I'm using this low up to this high. Just going to go to the daily. All right, so in fact, I just want to make sure I'm on the highest point. All right, so just going to drop to the weekly. You can see all these weekly lows in here, getting support through here. So the big question is going to be, of this range, are we getting support at 62 area and at these weekly support levels? Of course, we traded through those lows last week, but that can be a false break and then we can end up totally reversing. So it's going to be interesting over the next few days what happens here. Do we start to deal above, hold above this mid low here? So that's at 104.006. We start to hold there and move back up. All these pairs to the US dollar are very high in nosebleed territory at the moment. Would pull back. Not suggesting at the moment that a top's coming in. Well, a top may be coming in the euro dollar because that's pretty much at resistance, but the pound's broken above, so. But it has traded up to a strong resistance level. So what happens here on the US dollar index? Do we start to want to commit and hold below here this week and take out this low over here at 103.93 with conviction? We're slightly below that at the moment, but by the end of the day, if we close up here above 104.100, I would anticipate we're going to move back to at least 104.43, and then we could actually come all the way back up to where we came from. So monitor the levels. S&P 500 is just not changing too much. Let's go to the day chart. Has put in a higher bottom. It's just really moving up. It's difficult if you wanted to take any kind of position, you're having to buy at the top of the move, which is not ideal. Just want to go to the 4-hour chart, and this is the minor range at the moment. So if you're happy to engage the long side at such high levels without maybe coming back to a much more significant level of support, which is 55.20, last month's high, then look to the fib zones. 62.79% area here, 56.05 down to 55.89. Is that the dip area? There's a bit of an imbalance here that could need to be filled on the 4-hour. That would get you down to the 79% level. And then do we continue up? So, like so. I'd much prefer to see this. I wanted to trade this, take a position of any kind of length. I'd like it to come down to 55.20. And can it get support there? And then you would have a nice healthy dip, corrective dip, to then maybe take a position for a long-term move. It's always difficult to be a buyer when you're so close to the all-time high. All right. Euro dollar then. So monitoring this range, because all this price action where we move down and then back up is all within this bigger range. 79% levels at 108.99, and we're kind of, last time I looked, we were at that level. We're just fractionally above the figure. So we did trade above this high yesterday, 109.16. Are we going to see a fuller move up? Or are we going to fail here? So when we look at ranges, we're at what we call the expensive area of the range. So if you wanted to be long, you should have been getting long in the early phase of this move up, because this is where the sellers start to, if they're going to turn it around, this is where they're getting short. So it's not ideal to get long up here. We did have a rejection yesterday on this candle. So, and I was watching, I got short up here yesterday. I was watching up at 109.15. 4-hour chart. It's not quite broken the 4-hour low here. Pretty much tested it. But what we might see happen today, measuring across that rejection area of yesterday. And there's last week's high at 109.11. The high that we tested yesterday was at 109.16. 79% fib of that range is at 109.13. So anywhere from last week's high up to 109.15. Last week's high is at 109.11, 10 or 11. In fact, I'll just move that down to a 15-minute chart. Now, whether or not it's going to get up, I would much prefer, if I hadn't already taken a position, is to be trying to trade the resistance area, which is last week's high up to 109.15, 16, up here, 79% fib. Now, price may not get there because it's already, you can see it failed there once, twice, 3 times yesterday. But why I would much prefer to be a trader up there if I was going to execute a trade today, because it's already been proven to me that that area is being watched by the sellers. However, today you can see the last hour or so, we're really struggling at central pivot point and 109. So, you need to make a decision. Do you think this is where we're going to top out today? Look for a setup to get short here, whatever your setup is, or do you wait for price to come up to the higher area if it can get up there today? So you have to make a decision. As we rejected that high yesterday, I'm anticipating, don't know if we're going to get a change in trend, but we may get a move back down the range in the short term. So I'm more on the short side than the long side. But we can see today, this is the intraday lows of yesterday. We couldn't quite get below the low of yesterday. So support's coming in at the low area, the low 50-minute lows formed yesterday. So this, if we would revisit this, there's still the opportunity for the buyers down here to hold the market. So you can see it's held there once today. Price was to get back down there today. And you're bullish, euro dollar, this is where you want to look for price come down and test and hold to trade back up. All right, now it's already done that. May not do it again, may break through on the second go, or may hold again. It held there yesterday 3 times. So that's where support is intraday at the moment. Resistance is quite clearly at the 109.16 area where we were failing at yesterday. Euro yen had a big, let's go to the weekly chart, big outside week, did get support at this weekly high here, 171.55. Is that going to stop this pair moving further down? Or are we going to bounce to move below? What we are failing at, if you go to your monthly chart, is we're failing at this high over here. I've been saying it for weeks. We're very, very high on the euro yen. And now we've had a massive outside reversal week. Is that a signal that we're going to have at least some corrective time? All right. So that could be as much as it corrects just down to this weekly high, or this is the weekly swing range. Now that's the 50 level, so we might want to come down to the 62 or the 79% level yet. So at the moment, I would look up here for a rally because of last week's selling. Now, this is a large imbalance, doesn't have to get filled. Big question about, did we have an intervention last week? You know, we could come up a little bit and get more intervention. So I don't know whether this is going to get filled in the short term before we, could get obviously filled in the long term, but the short term, that may hold for us to move more down the range. So at the moment, it is stuck between this range here. It's trading within this range. You can see though we've had 3 rejections down on support. So if you're very much more bullish, this is the area of support that you would like to trade at. 170, 155. It's held there 3 times. But there would be a very high chance that you would get a bounce down there once more to be able to get a risk out of a trade and then see whether it could reverse back up for you. So at the moment, within the range that it's been trading in over 2 or 3 days, we're in between the 62, 79% levels here. And relatively speaking, we're a bit intraday, we're bullish at the moment. But you can see the figure 173 overlaps with that 79% level of the range that I've drawn. So that would be definitely an area to watch for. Could it come into that level? Hold and give you a tight entry to get short. Other level to watch would be up here at the daily support level we broke below at 173.50. All right, that would be an area I would watch for the day. Euro pound, it's just bouncing off an area of support, the last low of the rundown this way before we rallied. Currently, I would probably anticipate a bounce down there, but the trend is down, so just want to see. I'll probably just watch $84.16. What happens there if we get back up? Can that hold as resistance to trade down from? You can see it has been support before. Is this area going to be resistance if we can back up? So I'll just monitor that on the 15-minute chart. What happens up here? If we hit 84.16, does it start to want to hold? Can you see an intraday reversal back down? Quite clear at the moment. We've had a couple of tests short of 83.97, the day support level. Short, hit, and then it's been short ever since. So quite clearly support's down here for the buyers at the moment. And I will look up here for the sellers. Quite a small range, 83.97 to 84.16, but the high time frame trend's down. So I would look to sell a rally rather than trying to be a buyer against the overall bigger time frame flow. Pound dollar. Now, if you go to a weekly chart, of course, this is in an uptrend now. It's flipped back to up, but it's right back into this area over here. So that's 1,300. We've been a fraction short of that because we traded above it and then had a nice sell-off down from it. So 130, very exact number. Just because this is showing you into an uptrend now on the weekly, we can turn up on the weekly and then instantly stop and then change back to down. But we won't know that the trend changes back to down until we break this low. All right, we're very high at a significant resistance level here that we false broke. Just this weekly candle high here on the daily is pretty much where we stop. So that level's at 129.95. On the 4-hour, yesterday we went to 129.94.4. All right. You might not have known that line's there, but the rest of the market did, because that's why it stopped there. And on the 4-hour chart, it's turned the trend down. I just want to go back to the daily. Now, quite clear this has been a massive move up. There was a number of imbalances. There's an imbalance on this candle. There's a bit in here. There's another area here. We may well come all the way back down to fill these imbalances. And depending on the CPI data from the UK this week, if it comes in very, very good, as in lower, then we may see a top out. We've already had an inverted hammer. I would expect that this will come back maybe to this high at the moment, 128.93. 4-hour trend has turned it down. Question now is, can it come up and give you maybe a little head and shoulder pattern up here at the top? Left shoulder head, right shoulder on the other side. So 15-minute chart. Last week's high. That would be your sell zone up here. Last week's high is 79% area at 129.85 up to 129.90. Now, whether or not we can get back up there, I got short the euro dollar yesterday, but I saw this all false breaking and holding at last week's high, and I knew that 29.95 level was there, so I wasn't going to trade both, but I didn't trade this one because this is in a clear uptrend, whereas the euro dollar is at resistance. So I favored the one that was quite clearly false breaking the major resistance rather than being in an uptrend coming up to the next resistance level. But really, they're both at resistance. This has just been stronger trend, so I went for the one that was in a lesser trend. But just breaking down on the 4-hour chart, we have a lower bottom formed. Can we come up to form a lower top area this week? Okay. Pound yen, it's got that nasty last week's reversal. Trend's clearly up, so I would anticipate we might get some move down. Support at the moment is miles away in terms of 201.61. There's this area here at the moment, 203.825. Of course, to move down to 201.61, we have to break that level. So this is the level to watch at the moment. We're going to shift back to the upside. The best opportunity to try to get long is actually, well, these lows, 282. There's 2 4-hour lows there. There's another one that's 3, and then we got this area there. So this would be a great area to watch. If we came back down into this area this week, 204.156. If that area holds on another test, that's your buy area. Right now, it's stuck in this range. Now, we could still be going down, just talking about where the buy side area of support is. We're operating within this range at the moment, like I was showing you on the euro yen. Starting to get a little bit of resistance between 62 and 79% level. Already starting to actually structurally break down on the 15-minute chart. So if you're watching this, see it's broken down on the 15, 79% rally. So really what you want to look for now is this to break down, then come back up, draw your fib from this high to low, and look to sell the next rally. All right, because if this breaks this low, it's in a downtrend now intraday, quite clearly, and that was the best area to look for a sell up here, 79% level of that range. You've missed the boat there now, so you'd have to wait for it to come down, rally back. All right. And of course, as I was saying, the buy area is down here. If you're on the buy side, this is the area that you want to hold and look for a reversal back up. Of course, if you're on the short side, you want this area to break. But already, if you were selling at 79% level here, you could already be break even. If this was to come back up now, it just takes you out of break even. You should be risk free by now. All right, Aussie yen. Aussie yen's a bit more bearish than the pound yen and euro yen because the Aussie dollar has been a bit more bearish. I've just been monitoring this 4-hour range here. We came up to the 79% level. All right, daily chart. Going to go to the monthly chart. We just came short of this area. Another yen pair that I've been saying we're at major high levels. We're false breaking this monthly top. I've been discussing it for many weeks. Are we going to hold above that level? Well, if we see a monthly rejection up here, kind of, to me, suggests then that we have a failure to have the opportunity over many months to trade back down to historical lows. We're going to fail at historical highs. Potentially, it's going to move to historical lows. All right, now we don't know if we're going to get a complete failure up here at the moment. Monthly trend and weekly trends are all up, but nasty weekly reversal here. First of all, back to my monthly, I would anticipate we could move back down to here, 105.42, that monthly top. From a weekly chart perspective, support's down here, 104.93. There's a couple of highs in there. And, just as a retracement, you're looking at the 62.79% zone. That takes you a little bit underneath that area, potentially. So whether or not we get a complete shift of the weekly trend, or this is just a corrective phase within the weekly trend to come down to the 62.79% area. So daily, that monthly high got tested on Friday. We moved back below the monthly high, got tested to be the high of the day on Friday, and then it's a little bit weaker than the euro yen, pound yen. 4-hour chart, it's putting in a lower top. Are we going to see another bottom come in here? Another lower bottom? We're just holding at last week's lows at the moment, intraday lows, but that's last week's low, 106.74. Not quite yet prepared to commit below there. And taking a short up here at 79, stop above the high here, was the opportune area today to get short, because now you're testing last week's low. So you could, if you look to construct something up there, by now you can be at break even, and you're asking the market, can we break through last week's low? If you're more bullish, then you will be monitoring last week's low area here. Maybe you're more bullish. Can you see your trigger to get long? This has been most definitely getting dragged down by the Aussie dollar, so I'm not that eager to get long, even though this is maybe signaling intraday that we could be bouncing back up. We may well find at 107 starts to become a cap for any rallies here. You see yesterday, kind of 107 was support through here. What we might see today is that we get a bit of a switch, and that now becomes the resistance zone for rallies. All right. So I'm more inclined to think, looking to sell a rally, moving down to some of these major support levels. 105.42 is the monthly level, 104.93, 104.71 some weekly levels. We get another little spout of intervention. I think everybody pretty much ruled out intervention, but then with a bit of poorer US data, then a lot of selling pressure came in. So whether we had intervention or just the market, but we've had a very nice move down last week. Right, so the Aussie. Now, I did say last week, definitely said on Tuesday, I think. Don't know if I said on Thursday, but I definitely said 68. Last year was a very difficult area for the market. The weekly chart, 68 over here last year. So I said watch 68. We got fraction short leg. I think I got short about 67.94 from memory. I was trying to get short at 68 and didn't quite get there. So then I had to do my best to get in. There was a bit of an imbalance over here on the day chart as well. That's the end of December high to this year's low. 79% level there, 67.61, which we've tagged today to be resistance. Generally, at the moment, this will probably move down to this high, all these highs in here. Where we broke out to the upside started here, above this high at 66.88. So I suspect we will come back into this high here, 66.88. And then it'll be a question of, does the market find support for another leg up? There is the question now, we could be playing at this 79% level for a whole move down this range. Still a question in Australia as to whether we're getting another interest rate. Kind of talking about, oh, we're going to get another hike in August. So we're looking at the job figures, I'm sure, this week. If those go up, that might lessen the possibility of that. But inflation's kind of upticking a little bit, so I'm not quite sure whether they've got that under control on the curve. We might get another rate rise. All right, now the day trend is up. It's just in an area where it could put in a significant high if it really wanted to. And it's already, once it fell just short of 68, it's already had one move up, another move up yesterday, and these are lower tops. So it is telling you up here from anywhere above 67.88. Very difficult for the market. If you're not already short, areas to look for a rally at the moment would be the 62 to 79% area. I always focus on the 79 personally. That would be my objective if I wasn't already short, to look for a short at 67.76 at the moment. All right, 67.61. That's this high to the left. We might not be able to move above that level. Now that we've got a little bit of support there Monday, and then we've broken below. We've actually tagged it on that candle there. So we might not be able to move any more above that level. There's a 79% level as well, major range overlapping there at 67.61. So whilst I would prefer the high level, you have to appreciate that if price comes up and doesn't want to move above that resistance level, this high here, it can't get up there. So then you might have to decide, okay, how do I construct my short entry down from that level? Because I was trying to get short up here at 68 on the news, and it didn't quite get there. So then I had to decide what am I going to do. And I had to get in a fraction lower. So it's great to have a higher level to look for a short, but if you can't get above 67.61, that's the area to start to construct a short down to. And then, as I was saying, I think we could move down to where we moved above. See this imbalance formed on the 4-hour chart. When we broke above 66.88, we could be coming back this week to fill that area. So also last month's high, which is this high over here at 67.04. So getting down to around the 67 level, then 12 pips below, that's the 66.88 level down here. That's where I would target if I was wanting to trade short. And, does the market offer a further breakdown? I don't know at the moment, but I'm just anticipating that we could then, as I say, coming up, that would be ideal, but it may only get to here, and then do we come down into this area here? All right, New Zealand yen had a nice downward reaction from the interest rate decision last week, plus the sell-off, the buy-up of the yen, the sell-off of the cross. Now, the monthly chart, we've folks broken out what is on my charts, the all-time high. So again, with folks breaking an all-time high, that can often then change to a significant reversal. Trends are up though on the time frames at the moment. Most notably, the monthly and weekly charts are still up. There's a minor weekly low here. The major weekly range at the moment's here, and we're nowhere near the 62.79% zone. So it's plenty. If that's where we're retracing back to, there's plenty of time to move into that area. There's a little minor area here. If that breaks, that's going to confirm that we're moving down to lower areas of support. And at the moment, we're just contending with this area of support, 96.083. So about the 96 level at the moment is just or it's a bit overextended. In a normal market, I would expect this to come up. I would be monitoring this range at the moment. Wherever the low comes in, I would monitor the range for a rally back up. Assuming it's going to rally, back up to the 62.79% levels, which are back up here, but it could maybe, like I was showing in the Aussie yen, just be operating within this range as well. So you're going to have to monitor these ranges. That's range one to monitor. Do we come up to the 62.79% area? Is that as much as we can rally? There's a little imbalance in here to be filled. Of course, there's a bigger one there. Or is it going to operate within this range? I don't know at the moment. I need to see some price action form. So I don't know if it's going to hold within this range. Or is it breaking below this daily level of support and that just becomes resistance here to continue down? I don't want to sell it so low down at the moment. So that's why I'm looking at what range may be the appropriate range to watch for a rally, and where does the next maybe lower top come in. So at the moment, I'm just on the sidelines for this pair for sure. The two ranges to monitor is that larger range or the smaller range to monitor. New Zealand, I discussed the failure here at the 62% level last week. All right, so that's the range I was discussing last week, 62% failure. Got my double top here. I'm expecting that this level is going to get broken down here to move much lower down. So on my weekly chart, I'm expecting maybe this is coming down to 54.86. We start cutting interest rates on the New Zealand cross, New Zealand dollar, and maybe it's the interest rates, New Zealand, the US dollar are equal. But if the New Zealand side starts cutting more aggressively than the US, then this double top here could come to fruition, and that would be targeting 54.86, just in the proximity of this low here. It's going to be a while though if we get down to there, but that's the long-term pattern that I'm looking at. That double top here. All right, now 62% failure of this range last week. And then if you're monitoring the smaller range, we've had another rally back up. That's last week's high to low, came up to the 79% level. and we're into support here. So we might need a rally, but the trend's down. Okay, so the next rally range to watch would be this range on the 4-hour chart. In a perfect world, if we're moving back up within the fibs, look to, there's an old level of support here I've got drawn in. 62 level coincides with the 6098 level, so 6100. 6095 is a 62 level. That would be a perfect area to look for. Or the 79% level. There's a bit of a gap here we formed that we haven't filled. So whether we're going to fill that or not, but up here to move down, that's if we can get a high rally. There are some 4-hour lows here that we've moved through this week. We might only be able to come back into that area. So some areas to watch for a rally. So you want to look to sell a rally. How high we come up will probably depend on maybe some US dollar news. I did see New Zealand CPI QQ coming out. So that might offer a rally. But of course, if this comes in on a nice low number, it'll probably just move down and not rally at all, because the market will be starting to forecast a cut in interest rates. So, but that is a potential item that could generate at least a volatile, a volatility rally. All right, so you don't want to be selling at the low point here at 60.47. You can anticipate a bounce at least at the moment from there. All right, dollar Canadian. Now, I've been discussing this quite heavily down here. I actually traded this twice last week. I got long head of the CPI data and then got out because I was concerned about the data release. Made a couple of pips, and then after the data release, I got in. I actually got in a better price than what I was in first off. First off, I think I got in about 136.12, and I think I got in about 136.02 or 3. So I got in here when I saw that rejects and came back above. I got in here. So last month's low was at 136.02, and I got short pretty much at that level. All right, so we had a false break of last month's low. And I said pretty sure I said on Thursday, watch for 35.88. Can that get tested? Then do we reverse back up? So this area here. So what I'm seeing, this looks rather busy, but I might just take these two lines off at the moment. Just want to go to the monthly chart. We have a higher bottom here. And we do have potential lower top here, but with the interest rates in Canada getting cut, the interest rate differential favors the dollar CAD to rise. So this kind of head and shoulder pattern here, inverse, I'm thinking that now that we're holding above this area here, which is seen on the weekly here, that the market now is using this as support. I know it's sideways, but it's gathering orders here, consolidating to break above here. All right, that's what I'm anticipating. So I'm just going to clear some of these lines off. Of course, there's resistance up here. And of course, we can fail up here for sure. But when you look this, if this was a 4-hour chart rather than a monthly chart, or even a 15-minute chart, because time frame's fractal, it's the same in every time frame in terms of how it forms, is you would maybe think, well, if we're starting to get support here, we may break above here and, have a go at these highs up here. All right. So interested to see what the data brings tonight. I'm going to be at risk-free, so my worst scenario is I just get out risk-free unless I get slipped. Okay, so there's a minor lower top here in the day chart that's been broken above. At the moment, just want to see the monthly. That's the monthly. First monthly highs up there. So I'm looking at this holding to come up all the way up to 38.45. I know it's going to take out these highs, but I just think if data is being presented to show more cuts, we could come up the range. 4-hour chart. If you want to get long, most immediate range is down the 4-hour chart. Look to the 62.79% level for a dip. That would coincide with last week's high that we've broken above as well here. So that would be a good zone to watch for a dip, assuming we can get a dip. Ray and I asking me, so I'm risk-free. Yeah, I've got my stop loss. I've got my stop loss at my entry level. So unless the news goes berserk and gaps my stop, if it goes back down the range, it'll just take me out at break even. So I've got my stop moved up from its initial position to my entry. So my entry was at around about 36.02 to 3. Down here somewhere. So it would have to come back all the way back down there today to get me out. So hopefully it doesn't want to do that. Hopefully just, in a worst scenario today, we can maybe get a dip on the 4-hour chart structurally into this area to then move up. You can already see we've put in a higher bottom here. So we've actually gone there's aggressive candle down yesterday, but it was just ultimately a dip. All right, so we're ready for the next dip. So where would the logical dip come in? All this old resistance. That would be the area. So it's about 136.48-ish. Last week's high. Right now you're saying, why wouldn't I put my stop in the profit zone? Well, if I put my stop too close to price and the market fluctuates and the news is going to take me out, I'm trying to ride my trade up to here. Well, what did I say on the day chart? I'm trying to hold my position at the moment. Let's get rid of all these markings. If I'm in a long-term trade, I don't like to lock in profit because market fluctuates. So if I'm trying to trade up to here, or at least see if we can test the first high, is if there's market volatility and I lock in, say, 50 pips, I'll probably get taken out and I have no position. So I have to be prepared to, first of all, see profits. So I've almost seen 100 pips. So I'll get myself to break even. And then I'm going to see whether the market can continue to move up without taking me out. So if you want to capture like a 300, 400, 500 pip move, getting your stop too tight to the market, trying to lock in profit, will just get you taken out. So I'm just going to try and ride the trend. So, over the next couple of days, we may, on the day chart here, have a day down tomorrow and another day down. But we might only come back to this area. Now, my entry is here. All right, but if I started to move my stop up to lock in profit, I could get taken out here. And then it turns around and I have no position. So all right. Back to my 4-hour, just put that back in so we can see what transpires. All right, dollar franc. Not really that fussed about dollar franc at the moment. It's kind of in opposition a little bit to what I'm seeing in other pairs. And it's just stuck between this range here. So really, I'd like it to come back up to 89.91. That would be an area of resistance to look for a short potentially. And supports down here at 88.92, and we're kind of nowhere near either one of those levels. So those are the two levels I'm watching. Dollar yen. Are we going to further move down? It's doing the same kind of range that I'm seeing on, the Aussie yen. Sorry, the Euro yen and the pound yen and the New Zealand yen. It's doing this range here. So just to the day chart. Notably, well, I'll go to the monthly chart. Notably, we've moved back below that major high here that we held just underneath, and then we had an intervention sell-off back in, what was it, April? I think it was April. And then, or May. Then we moved above this month. And now we're back below. So are we having a major failure there? Now the weekly trend's up. You can see here, higher bottom, higher top. It may only just have a, like a 62% retracement or a 79% retracement of that range. We have hit the 62 level already. So a little bit of a one day up at the moment. And it's bouncing off this area here at 157.70. But the day chart trend is down at the moment. The weekly trend is up. So we're going to go deeper within the range of the weekly chart. So if we come back up, that's the bigger range to monitor. There's obviously this imbalance. We could just come back up to the 60.13 high or the 166.33 major high. So the 16.30 high is that was April intervention there. Or the 160.30 high. This would be an area to look for resistance if it came back up. We got these 4-hour lows that were sitting on top. At the moment, that's the bigger range to watch. We've got this other range here where, like on the Euro yen, pound yen, we're staying in the 62.79% area. So structurally on the 15-minute chart, we're down now. We've come up, we've broken this low, came back up, we've broken this low now. So we kind of have a lower bottom, lower top, further lower bottom here. It is now breaking back down the range. Within that range that I've just drawn in, I would much prefer the 79% level at 158.95 as a sell level, because you've also got the figure up here. But whether the market could get up there, that US news coming out later in the day could. Being able to watch. All right. Now, of course, support because once more come in at the lower levels of last week's low. There's last week's low. We've already false broke it. So last week's low is at 157.36. And you got 157.70, which is support from your daily chart. This area here. So whilst we've bounced up, we could maybe just simply, back to my 50-minute chart, we could maybe just simply come down into this area later in the week, hold to move back up once more. All right. Whilst there's been intervention, maybe, the interest rate differential still favors the dollar yen to move up or get support. But, when we had the last intervention, let's just go back to the day chart, we had one, two, we kind of had 3 moves in here. We've only had really 1 move at the moment of magnitude. So there's still the opportunity that we could come all the way back up in this zone and then see another sell-off. we'll have to wait and see. So not that easy at the moment. The yen pairs after their decline last week. Which range is the most appropriate range to utilize? I would, with all these yen pairs, I would much prefer the larger range, price to come back up the larger range, and then we see another sell-off. But the market will do what it wants. So there are two ranges to monitor at the moment. All right, just finish on gold. Gold's going north. Here's the day chart. Almost back to the all-time high. $24.50. Difficult to buy at the moment because, well, you're right at the highs, aren't you? But trend is up. You could look. You just want to monitor the 4-hour range at the moment, or monitor a dip. 6279% zone. If you're prepared, to buy at such high levels. Personally, I don't like doing that. That's your option if you want to be a buy up to buy a dip, and that's the most immediate 4-hour range. Personally, once we're testing an all-time high, I don't like then just to buy a dip so close. There's an intermediary low here on the daily chart. I'd much prefer to see this come back within this range. So if you're then looking for price to come down and get support at the 62.79% area, maybe area of support here at 23.68 area, is if you're buying down here, you're not buying so close to resistance where price can fail. If you're buying at a support area, that's where you expect the buyers to come in to prop it up, to then move up to resistance. So as you're on top of resistance, buying anywhere near there is getting closer towards being suicidal as a trader, because that's where the selling pressure comes in. So, but your only option as a trader, if you want to be a buyer, is you have to look for a dip in the most immediate range. As you break them into smaller ranges, is there. So you could look to that range, but wouldn't be my preferred option. I'd look to the day chart range and have my fingers crossed for a deeper pullback. Because now that we're moving up here, we might not want to take out this high, and we might want to come all the way down the range again. There's quite clear strong support in this area, but we could have strong resistance in this area, and we could just stay within a uptrending range. All right. Right now you're saying, do I use volume indicators or MACD? I will use MACD. I don't use volume indicators, but I will use MACD. For example, my other charts with MACD on here. What I tend to do, if I think something's topping out like the euro-dollar at the moment, when we get a strong, or the pound's even better example, when we get this strong move up on the pound, and I think maybe we're in an area where we could top, what I like to see on the 4-hour chart is that the MACD's crossed down. So if I'm thinking, okay, whilst we have an uptrend here, do I want to entertain a reversal up here? What I like to see is that the 4-hour chart at least has shown a momentum shift to the downside. And then, as I was suggesting before, maybe we're going to come up and maybe at the 79% level and come down, because this MACD is now down. If that MACD was not crossed down and I'm trying to do this, I'm concerned that it won't work. That we'll just move through the tops. So in terms of an indicator, I like to use MACD just to give me an idea. Has that momentum run out in the short term, which might then lead to a larger term pullback. All right. All right, that's my thoughts for Tuesday. Be aware of the news items coming out at forex.com. Obviously, the Canadian CPI news this evening and the US core retail and retail sales. So there's going to be some volatility in that window. And then there's some more CPI data coming out tomorrow for New Zealand in the pound. So be aware of those items, okay? All right, if you want to join me for more webinars this week, just head over to our webinar page and you can catch where I'm coming in. Be here tomorrow at the same time to do range trading using Fibonacci. All right, thanks everybody. Thanks for the questions coming in. Have a great trading day. I look forward to seeing you next time. Thanks everybody.